To keep you updated on the capital and financial markets, here is a recap of what happened.
In the fourth quarter, Singapore unit trusts reported 998 million Singapore dollars net outflows, a significant shift from the 264 million Singapore dollars net inflows recorded in the previous quarter, according to Morningstar's latest Singapore Fund Flow report. As reported by Singapore Business Review, equities bore the most outflow, with 432 million Singapore dollars being pulled out in the fourth quarter. Fixed income assets followed suit, with a net outflow of 204 million Singapore dollars. Meanwhile, money market funds saw a net outflow of 150 million Singapore dollars, and allocation and alternative funds experienced outflows of 195 million Singapore dollars and 16 million Singapore dollars, respectively. India's economic rise is prompting South Korean companies to pursue initial public offerings in the Indian market to raise money. By going public in India, these companies plan to solidify their market presence in local markets and secure funds for future investments. CJ Logistics' Indian subsidiary CJ Darkor Logistics recently passed the preliminary examination for listing by the Securities and Exchange Board of India, according to industry sources on the 3rd of March. CJ Logistics submitted the preliminary listing application in November last year. Reports suggest that CJ Darkor is preparing to list on the local stock market. The company has been briefing investors at home and abroad and plans to finalize the remaining procedures, including demand forecasting, to list as early as the first half of this year. This is the first time an overseas subsidiary of a Korean logistics company is seeking an IPO in India. The company stated that the opportunity for business expansion in India, along with the growth of the Indian market, was the driving force behind the decision to go public. Some investment managers are looking to change the currency their funds do business into the dollar to prevent their foreign exchange transactions from failing when U.S. securities move to a shorter settlement cycle this spring, specialist currency managers said. The U.S. Securities and Exchange Commission adopted a rule change last year for securities such as equities to settle 1 business day after the trade, or T+1, instead of 2, starting on the 28th of May. It is aimed at reducing market risk. However, the shift is raising some challenges for foreign asset managers who must swap their local currency for dollars to fund their buying and selling of U.S. securities, managers said. Greenwashing is becoming a growing concern, with investments in environmental, social, and governance globally reaching trillion-dollar levels, according to Securities Commission Malaysia head Datuk Seri Dr. Awangadek Hassan. He emphasized the potential repercussions of greenwashing on investors' confidence and the dispersion of financing crucial for an equitable transition during his opening address at the IICS-IDC Corporate Governance Conference 2024. Awangadek pointed out the growing trend among companies and investors towards adopting sustainability as a viable investment strategy. Tokyo's claims to fame as a place to invest and a financial center are receiving growing endorsement, both financial and verbal, from a widening circle of investors and financial experts. The most obvious result is that the benchmark Nikkei 225 stock average punched up to an all-time high above 40,000 on the 1st of March, eclipsing its previous bubble economy peak set in 1989. Those extolling the merits of Japan's financial renaissance include economist and Harvard academic Paul Sheard, former vice chairman of S&P Global, who has advocated seizing new opportunities in Japanese asset management.
The latest e-Zine is now available for download at FIMM's official website. Download your copy today to keep up to date with what's going on in the industry. This has been the FIMM TV Weekly Recap. Be informed, stay updated. Be sure to like, share and subscribe.